Hey everybody, I am Erica Carlson with Bricks Real Estate. I am a local realtor working in the Wright County, Hennepin area, and I'm here to bring you data whether you're thinking about buying a house or you have a house, or maybe you're thinking about selling the house that you have. I think that this data is always helpful to homeowners. I also have a special guest a little bit later in the show. She's from Bell Mortgage Bank. Her name is Molly Zimmerman. I have had her on as a guest before. This week, we are going to talk about multifamilies. And in particular, there is a new program rolling out that will interest you if you've ever thought about being a landlord or any sort of investor type of property. We're talking about 2 to 4 unit properties in particular. So they're not quite apartment buildings. They are what we call multifamily. So before I get into that, let me show you this week's data that we had just the tiniest incline of showings. We went to 537 over 533. So nobody would notice these minor changes, just kind of a slow up creep over time. And then when we compare that to the properties that do not have any contingencies, then the number drops to 493. So it's kind of an interesting distinction. That means a bunch of those houses are just sitting there waiting for the contingencies to be removed, and then they will switch to pending. And so sometimes I get phone calls where people are confused about the difference between a contingency and a pending. So just real quick conversation about that. A contingency means that the buyer is putting an exception. I need this to happen before this can happen. And so maybe they have a house to sell. Maybe they want to get an inspection. Oftentimes on townhouses, we are going to see a contingency where somebody has time to review the paperwork. And so a lot of this, this difference between 537 and 493, yes, some of those properties could become available again. Most of those are going to move to pending. And so letting your eyes drop down to that column, notice pendings have once again dropped down. That means that the buyer activity is slower. There's just not as many people out there. So we've got this slight incline of inventory with the decline of the buyer pool going down. And so that's what makes it a hard time to sell a house right now. Not impossible for sure. And of course, the lower your price point is, the more likely you are not going to feel the effects of a winter sale. However, I will say to you anecdotally, this is just from my years of working as a real estate agent, people are looking for bargains right now. And so one of the hardest parts of selling your house is that you're going to get those offers where people want closing costs. They want you to give them time to sell a house, or they just hit you with a $20,000, $40,000 price reduction. And of course, you're naturally going to be annoyed because you're going to think, I could get that house sold for more. And if that's the case, then my recommendation, and I know I'm probably not your real estate agent, but I'm saying it anyway, you might want to wait until after the holidays if you're looking for top dollar and a quick sale. Again, it depends on what you're selling. Of course, work with your agent to figure out timing. This is an extremely important conversation at this time of year. So jumping down to the closed data, notice it's 181. Last week it was 194, the week before 178. There's not that much change. Houses are closing. Houses sell every single day. So don't get in your head that you can't sell a house in the fall. Real estate transactions are always happening. It's just the way that things are moving. It's going to feel remarkably different to sell a house in November than it might be in March. Of course, I don't have a crystal ball, so I'm just basing this on past data, excuse me. All right, I always tell you guys, this is my favorite data, which is super nerdy of me. I am completely aware of that, but it gives us an idea of who's out there shopping. And we had a really nice incline of buyer activity for November 15th. Notice last week we were at 1.55 and we jumped it to 2.38. So speaking English now, the way I would present this to you if you were my seller in Wright County is I'd say 2 showings per week per listing is average right now. And that's nice. It was 1.5 last week. So more people came out of the woodwork to shop for houses. Now I've got a window next to me. There's no snow. It's been really nice outside. In fact, I know somebody who's getting a new roof this week. This is help keeping buyers out there. If we were to get hit with a sudden snowstorm or it got bitterly cold like it did around Halloween, this is what makes people back off and stop shopping. Weather deep deeply, deeply impacts real estate. In fact, it should make you mindful when you're selling a house. If a major snowstorm comes in, it's not time to list your house. Hold off a couple days, wait for it to clear off. People will come out of their hibernation. People don't typically want to look at a house unless they're extremely desperate when the roads are bad and the weather is bad, etc. It's kind of common sense. It's just a matter of like thinking it through and like why these things happen. When we compare this data to Hennepin County, they have not had much of a change. We go back 2 weeks, they were at 3.34. Now we're at 3.06. If I'm selling a house in Hennepin County, I'm not feeling this. I'm thinking about 3 showings a week, maybe 4, maybe 2. That's what they're getting. So it's definitely a faster pace to sell a house in the metro. Absolutely no surprise to any of us who live in Wright County. The population just isn't supported out as we go in the boonies, as they say, right? When you live in the city, we live in the boonies. That's okay. We have some showing activity. And then just a side note, I was looking at the data a little bit closer, and I know I don't normally go this deep. And again, this might sound like common sense, but I'm doing 250 to 500K. This week in particular, the majority of showing activity was in 250 to 300K. So, whether it was a particular listing that got a lot of attention, maybe kind of threw that number up, that is possible. One particular house can throw off the data for the entire county. I know that sounds crazy, but we have had that conversation before. I know personally, I have a listing in Rockford, and we have had an enormous amount of showing activity. I'm not tapping myself on the back or anything like that, but we have, so it just makes me think, okay, who else out there is getting that kind of level of showing activity? And I can only dig so deep. So some of this just has to be anecdotal, but I can just tell you, the cheaper the house, the more activity you're going to get. And so if you're having trouble getting showing activity and you are selling a house right now, try a different price. You would be shocked how many more people might come out and look, because now you've hit their price point. Naturally, the lower the price, the more people are qualified to purchase the house. All right, let's jump down to days on market. We're looking at 40 right now, and I base this data on pending sales, like houses that are actually selling. I'm not looking at data from last month anymore. I used to do that. I just don't think that's very accurate for you. 23 is the median, and these are nice numbers for winter. I mean, we haven't even hit the 2-month mark, right? 60 days would be 2 months. So that's still telling you that if you have an attractive house, a clean house, and a well-priced house, that generally people are going to like, not a lot of quirks and things like that. I mean, that definitely impacts us. But if you're hitting those measures, clean, staged, presentable, more modern, plus again, the price has to be right. If you price high and then expect a quick sale, that's going to be what's going to bite you. So again, if you're over 500K, make sure that you're working with your agent closely to figure out timing. Maybe if you can wait, you might want to. However, if you're a buyer, talk about move time, like go take advantage of the way things are in the moment. And again, if you're seeing something at 40 days on market, it doesn't mean it's been sitting there for a long time. That's the average time. So don't let that get in your head too much. I see on my screen, my market report came up. I do have a link on the bottom. If you want to get a hold of Molly or myself, you can get a hold of us in that contact information and the link. If you want a market report for your city, I have some set up already. If you want a custom one, I encourage you to click that button and I'll send that over to you. No strings attached, not a big deal. It gives you that data. That's what this is all about. It's about informing you, educating you, making you make the best decisions for your personal situation, whether moving or staying, or you're just curious, like, what am I holding on to? What are my options? That's what all of this is about, is just empowering you to make decisions. So without further ado, I'd like to bring Molly on. I told you she was from Bell Mortgage Bank. She's a fantastic loan officer that also lives in the West Metro. Her office is out of Maple Grove, and she's here to answer all your questions about loans, refinances, HELOCs, anything of that nature. Today, what we want to dig in, not to be over overly repetitive, but we want to dig into multifamilies. So happy to talk about something that's just on the precipice of being a reality, which is November 18th is this key date where now Fannie Mae has made some changes to multifamily. In particular, we're talking about duplexes, which we consider a 2-unit up to a 4-plex. And I know this is an important change. It's something that everybody in the loan financing world is talking about. Molly, can you explain this a little bit better? Because I am not doing a great job right now.
Absolutely. Thank you, Erica.
Yeah.
So Fannie Mae announced a few weeks ago that beginning November 18th, they are going to allow as little as 5% down on multi-unit primary residence purchases. So that would be your duplex 2 to 4 unit property. As long as you plan on living in one of the units, you can get by with as little as 5% down. The reason we find it so exciting is because in the past, you had to either meet certain income limitations to be able to get in at 5% down, or you were looking at on a duplex 15% down, or on a 3 to 4 unit 25% down. So it's a really substantial change. For me, I think of it in terms of maybe you're a first-time home buyer and you're thinking about getting into investments down the road. It's a great opportunity to get into that first property with minimal down, rent out a couple units, and then when you're ready to make that move onto your single family property, you've got that rental unit as part of your portfolio and you've got rental income generating from that property.
Absolutely. So we call it house hacking, right? Or it could be as simple as somebody renting out one of the rooms in their house. That's a version of house hacking. That's kind of the one that comes to people's mind. But this is another version where, you have to think a little bit outside of the box. You have to be open to shared walls. I mean, we know it's not for everybody. And I think, your key distinction that we talked about off camera was that this is not for a traditional investor who is not planning on living on site. You have to be willing to live in this property and make that work, which there's lots of people who want to do this. So I'm excited to talk to people. I mean, we have been, but this is the point of the video today, is to get this message out again to our community. In all reality, just as a side note, most multifamilies are going to be in the metro. It's not impossible to find it out here in the Wright County area. I can think right now, I know of a place in Monticello that's for sale. I think there's one up in Clearwater, but they are hit and miss if you're looking for true multifamily in Wright County. But if you're open to Minneapolis, St. Paul, lots and lots of options that we can help connect you with.
Yeah, and I think it's super exciting to have somebody else help pay your mortgage for you. I mean, who doesn't want that, especially as a first property? So I think it's an exciting change.
Absolutely. It's a big part of how I got into real estate, was investing in in these types of properties. And so I think it's a nice, I think about real estate as a ladder where, you start somewhere. It might not be your forever home. It might not be your perfect even situation at the moment. For me, it was a townhouse where we rented out a room. That was our version of house hacking initially. And then of course, now I'm out here in Wright County, and I'm in a very different situation, but it wasn't the first step. We can't just necessarily jump up to exactly where we want to be long-term. It's all these little steps. So, all right, I'm going to stop there. Thank you so much for joining me as always.
Thank you, Erica.
Yeah. Have a great week. We'll see you soon.
All right. See ya.
Appreciate you. I'm so glad you joined me until the end. I will meet you here at this time next week. Whether you're finding me on YouTube, please subscribe and like. I appreciate you very much. Whether you're finding me on Facebook, you might be seeing me in a community group. You are more than welcome to join me on my professional page. Again, the links are attached here. I am happy to be a resource. Have a great week.